Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. First things first. First, I will be on BNN Bloomberg at 9 a.m. next Thursday for a market review and update, plus anything else that they have in mind. So, second, today I will give you a bit of a preview about what I am going to be saying about the market. I need to do this in any case, to put the FANGs in context for this week and maybe for some time to come. And the critical context is that the Standard & Poor's 500 is closing in on a valuation which it last attained way back in the year 2000 at the market peak back then. For your information, that top was at its low supergrowth price, or 4.5 times book. It has a bit less than 6% to go to reach that breakpoint level. Now, at the same time, the NASDAQ 100 has been rallying up from its recent lows following its hit and 15% setback right smack up against its HB1 price. That's 9.5 times book value, way back in July, August. From what I can see, the NASDAQ is likely to get back there again. Well, that is also less than 6% away. So we have the intriguing circumstance in which the two major North American indices, the NASDAQ 100 and the Standard & Poor's 500, are within a very short striking distance of what may be two potential market tops. I will be giving BNN viewers the precise target prices on Thursday, so please tune in. We rarely get these two indices perfectly corroborating each other, and I will be as curious to see what the outcome is going to be this time around as you. Are they moving up towards a perfect top? Or is this a move that is preparatory to a breakout, which would be, in a very real sense, intriguing, if astounding, given the extreme valuations of both of these two indices? For the moment, what all this means is that I am content just to watch the FANGs and see if there's any follow-through to their recent market action, their gains. Although already the answer appears to be more caution than optimism. With that as background, without further ado, let's take a closer look at the FANGs for this week. As always, before I do, I like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Well, let's start off with our friend NVIDIA. And NVIDIA has climbed right back to its HB7 price, and it hasn't been able to break out as of yet. Indeed, I think given what's going on in AI, I would be surprised if it does. But, of course, if the market can break out, all bets are off as to where NVIDIA would go from here. Amazon, in a sense, is already broken out. It had fallen below its bubble price, but it clambered back on side, and it just kind of hanging in there. In a sense, if you hold this, this is what I would call one of your safer holds, because your exit point, which is breaking below the bubble price, is so close at hand. Alphabet, of course, had a beautiful setback from its bubble price, 7.4 times book, to its mid-super growth price, which is 5.5 times book. Had a perfect bounce there, and as you know, I've said the last couple of weeks, this is where I like to buy stocks. Okay, and it continues to behave nicely. Microsoft is, I don't think it knows where to go. It's kind of threading the needle between the HB1 and the HB2, which is 9.5 and 12 times book value. But, you know, what do you do with a stock like this? Well, this is a no man's land. And I think, I guess if you hold it, you continue to hold it. But if you don't hold it, then the random walk theory tells you just forget about it for now. Meta has clearly, actually a couple of times broken out over its bubble price, which you know, that is its very, very long-term high, and continues to just kind of hold in here. It's a stock that I would very definitely hang on to, and of course, if the markets are with you, then it goes further. If not, well, you'll know what to do. Apple, take a look at Apple. If I just put this there, okay, can you see that dotted line there? That's kind of been the ceiling, if you like, the technical ceiling. That Apple has been up against now for some period of time. As you know, the fundamentals do not interest me. Very, very slow growth in sales and profit, and the stock is well, 56% above its fair market value. I guess under the current circumstances, however, we wait to see what the market tells us to do. Tesla has moved up, contrary to my own expectations, by the way, right up against its HB2, or very, very close to it at any rate. I would suspect, by the way, this is going to require the market to break out for it to move any higher than this. Certainly, the industry fundamentals do not look very good at all. However, we let the market decide for us. Netflix, I think, would like to break out. Look at that; it's right up against its HB2 price there. And if we take a longer look at Netflix, you can see why I am intrigued by it. It has been higher, in fact, quite a bit higher than its current HB2, which is 12 times book value. We've got a rising fair market value trend, and indeed, the last time that the gap was this wide, the stock was quite a bit higher. So, could it go higher? Yes, but it has to break out first, and I will see that, or believe it rather, when I see that. So to briefly recap, off the top, could NVIDIA break out over its HB7 price and head back to its peak? I think that the overall NASDAQ would need to break out to do so. And investors will then have to suspend all belief in rational valuations. It could happen, but I would wait for the NASDAQ breakout before I would bet any money on it happening. Amazon's already broken out, but broken back out is more the reality. I would hold, as your real investment risks are very low right now. In other words, the bubble price has to hold. Alphabet hit a nice low at its mid-super growth price, 5.5 times book, and I am most content to stay with it, as I have observed in the last couple of weeks. Microsoft is non-committal, right in the middle of two breakpoints, and that's how I would treat it. A coin toss, which, to my way of looking things, is a poor way to invest. Muddling Meta remains indecisive, but also probably remains a hold. From the point of view of pure technical analysis, Apple would be a hold with the hope it can break out of its current flat trend. From an SVA point of view, I'd rather be in Poughkeepsie. The overall market may well give us our marching orders for this stock, and I would wait to act. By the way, that may mean either way, sell or buy. Tesla is almost dead at an SVA crossroads. I am still inclined to be bullheaded and maintain my sell on the shares, even though I've been flouting my own methodology. Well, we'll see soon enough. Finally, Netflix could be trying to break out over its HB2, that's 12 times book, and head back to its all-time high, which is a couple of breakpoints higher. But the proof of the pudding will be that phantom breakout. The leadership of the NASDAQ will, I suspect, be crucial going forward. Anyway, that's all for this week. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week, but maybe next Thursday.